Hello, everyone, and welcome along to this live webinar. And today, I'm joined by Daniel Foch and Nick Hill, along with Oriel from our team. Hi, Daniel and Nick.
Hey there, thanks for having us.
Happy to be here. Excited.
So perhaps Daniel and Nick, perhaps one sentence about yourself to the people that perhaps don't know you yet.
Yeah, I'm Daniel Foch, real estate broker and investor, and one half of the Canadian Real Estate Investor podcast. My better half is here as well.
I was just going to make that same joke. You beat me to it. Yes, mortgage agent, real estate investor, and lucky enough to be Dan's co-host on the podcast. And if you guys can see me, you see I'm in the car. I'm actually on the highway coming back from looking at a bunch of rental properties. So out here doing the real thing.
All right. Thank you, guys. So the agenda for today, I will start with a brief overview about the platform and I will focus on some of our great new features. Then we will actually take a property deal that Nick, you sent me, and we will analyze this specific deal using the Lendlord software. And we'll deep dive into the metrics. The workflow plan generator is something that I will show in the overview. We'll speak about best case and worst case scenarios when analyzing deal. And also we'll deep dive into, I want to get one example of Google Maps and hear, your thoughts, what people can actually, what insights you can get from a Google Map, if you're not driving to see all your prospect properties. And then in the end, we will have some time for questions and answers. So if you have questions, feel free to put them on the chat. And then if it's relevant to the topic, we will answer. If not, we will keep it to the Q&A sessions. So let's start with overview about the platform and new features. So Lendlord basically separated into three main sections. The first one is Invest, which we have the deal analyzer for rental properties and the deal analyzer for flip properties. On the Manage section, you will have set of functionality that will allow you to manage your property investments. The portfolio overview is your dashboard, and here you can see high-level metrics on your portfolio. You can see the current LTV level, the 12 months cash flow. Basically, it's the past 12 months, 12 months cash on cash, some due date and reminders, the status of your rent collection, the breakdown of your expenses, and some other stuff. Then on my portfolio, this is the main page. Here is the page to add your existing properties. You can also manage more than one owner in one account and also more than one ownership. So if you have properties that you own under a company or private ownership, you can manage everything on Lendlord. You just need, when you add a property, use the different segments, and in the ownership section, just define the ownership of this property, and it will take into account when you filter the properties all around the platform. So when you add a property, you will have different sections: the general details, the mortgage details, enhanced property details. You can store your utility suppliers, the landlord insurance, and if you have other financial products. On the My Portfolio page, you can also define different views. So for instance, the equity view, it's a predefined view that the platform basically generates in the beginning. I really like this view because basically you can see just the equity and the LTV for each property. But you can use the Manage Views button to create your own views. So you just name it and select the columns you want to see. and you can create a new view. My tenants, this is the page to manage your tenants and tenancies / leases. You can add new tenants. The platform will create payment schedule for you. And then you can track the rent and the rent collection. A heads up, we are going to launch a tenants app. And in the tenants app, you will be able to invite your tenant to review the payment schedule, for instance, and to review important documents that you want him to see. For instance, if you have a welcome pack for the tenant, or if you want to upload the lease agreement. So you will be able to invite your tenant, and you will have also a messaging feature, so your tenant can contact you through Lendlord. And the best thing, we will also implement payments initiation. And so your tenants will be able to pay the rent using the Lendlord app. So this is not live yet, but hopefully will be launched in the next few weeks. Some of our new features are this page, My Documents. So it's a great place to manage all your property document or your property business document in one place. So on common files, you can actually upload any file that you want. Just name it and upload a file. Then you have the properties documents. So for each property, the platform basically suggests predefined documents that you should upload and store, but you can use this box to upload any other document that you want. So you can have all the documents you need for each property stored. Then on the owner level, you can also upload personal documents. And if you have companies, properties that owned by a company, you can manage the companies as well and store the documents of this company. The nice thing I like in this feature is that you can share the documents with others by creating packages. So if you create a new package, you need to select the purpose. Let's say it's for a potential buyer. Then I will select the property. Just want to make sure I have, let's select this one. Then you just need to select the documents you want to share and create package. So the platform will take some data from my portfolio about the property, about the ownership of this property, and about the tenancies of this property, and the documents you decided to attach. Then after that, click on Share Package, type in the email address, click Share, and decide the period you want to share this link to be live. In terms of security, don't worry, you can always extend the time. So now I will receive an email with a link. So even if I'm not a Lendlord user, I will receive this report as an HTML page, and I can review the details of your property, and I can download the relevant documents. So it's relevant for potential buyer, but it's also relevant for your broker, for your mortgage broker, for a lender. So all the documents stored in one place. By the way, this is part of our premium plan, which is $99 per year. So Lendlord, just to for those who don't know, so Lendlord is a free platform. It's free to use. You can manage unlimited properties, but there are some extra features on the paid on this, like you need to subscribe and upgrade to the premium plan. On the manage side, you have also the cash flow management. So on the transactions page, you can link your bank account, and we use Plaid that implements the open banking. It's our trusted provider. Lendlord don't store any of your credentials to your bank account, but just get a read-only access, and the platform will retrieve your transactions every 24 hours. Can actually show it on QA. So every 24 hours, the platform will retrieve the newest transactions, and you will be able to allocate them to the relevant properties. So it's very useful to keep track. You can also apply rules. Okay, so it's not working for right now because of I will not put my real credentials. So, but the idea is that you enter your credentials, the platform creates a connection between Lendlord to your bank account with a read-only access. The platform will retrieve the transactions every 24 hours. And once you log in, you will get a wizard to allocate the transaction to a property. If it's a rental, payment to the relevant tenant. And if it's an expense, also to a category, also income you can categorize actually. And then you can decide that it's a recurring transaction, and then every time the platform will identify the transaction, it will use the rule to allocate it automatically. So this is also one of the features on the premium plan, but it will allow you to keep track your portfolio cash flow. You can see the income and expenses for the entire portfolio or for a specific property. Or also you can apply different owners. Then in the reports, you can generate P&L report, property breakdown report, so you can see the income and expenses per property, the expenses breakdown report, income breakdown report, and tax report. So this is also something that we are now working on. As you know, Lendlord started in the UK, and we are now extending our functionality in Canada. So we are now building the tax report for the Canadian audience, and it's going to be a very valuable feature. So you will be able to download it and actually send it to your accountant. So this is also something that is coming soon. And the last thing that I will show on the managed side, their interactive reports. So this is a great way to see your portfolio in a high level. So you can see how much equity you currently have, the performance of the entire portfolio, and you can see the best, the top performing properties and the worst performing properties in different metrics. You can get some reminders. And also you can review your prospect properties that you basically analyzed. Then you can just go property by property. As you can see how this property ranked if you compare it to other properties in your portfolio. And you can also change the numbers. So let's say I think that the value now increased. I can change it also from this report. And the third side, and here we use a third-party provider. So you can apply for a mortgage. Our partner is HomeWise, an online mortgage broker. So you can apply to get a mortgage through their digital and online journey. And the last feature I wanted to show you, you know what, this is the works plan generator, but I think that Nick, Daniel, we can start analyzing the first deal, and then we can show how you can actually create a works plan using the deal analyzer.
Sounds good. On the finance page, does that underwrite, like, does that know your portfolio and sort of give you finance offers, or is that, I think you had mentioned that was in the roadmap, right?
So yes, so currently the integration is there just to get the rates that are now live, and when you start the journey, the HomeWise will ask you several more questions to assess if you are eligible or not.
Nice.
Next stage is to integrate it into Lendlord. So in our UK version, we do it, it's basically embedded into the platform. So we will know the platform will know to analyze your profile, and based on that, to show you just the lenders that are available for you. And if there is a lender that is not, you will see why. In the Canada version, currently we use HomeWise just to start the process, but it's definitely something that will be soon. And we have some Canadian lenders that we speak with to also provide bridge financing, hard money loans, and other financial services that will help you to grow your portfolio.
Awesome.
All right, so let's start analyzing a deal. So Nick, you selected one property. Let's take, we have 104 Harvey Street and we have 856 George Street. Which you want to take to start with?
I'm easy. George Street's in Peterborough. I chose that one because it's I actually own a property down the street, so I was able to hit a little close to home there, and you know I knew the rents and stuff off by heart. Different properties. This is just a duplex. The other one is a fourplex with a mix of bedrooms. So I think it'd be a good exercise to do both, and you know maybe run through them a little quicker, and then open up to questions afterwards.
Sounds good. Sounds like a plan. All right, so let's start with this property. So first thing I would do, I would go to the invest from the menu, click on rental. So on the deal analyzer, first thing you need to put the address. Then we will ask you to enter two data items, the purchase price and the expected monthly rent. So the purchase price, should we put the 474,900 as the purchase price? Or
yeah, I always just leave the purchase price as is, at least for the first kind of rendition of running the numbers. You know, assuming that there is no negotiation unless it's pretty obvious. That you'd like to see if the deal works as is, and then I like to play for it from there. So yeah, let's just leave it at 474 for now.
all right, no problem. And expected monthly rent for this property?
3,200. And that's at assuming like 18 for the main floor and 14 upstairs. And I'm just using those numbers because that's exactly what my property just down the street inside.
All right, good. So as you can see, like immediately the platform will put its own defaults to generate the initial metrics for the first year and the long term. But this is just a start. So now we will start tweaking the data and adjusting the numbers accordingly. So are you going to
improvement costs? I had at 0. It looks to be a pretty turnkey investment. I believe I had closing costs at 12,500.
By the way,
it's kind of more of a
yeah, in Lendlord you can actually break down the entire closing costs, but in this case you say let's put like one number. What was it? 1,200?
12,500. Yeah, and just for anyone on the call, again, I think it's important to note that you can get as detailed or as high level kind of elevated napkin math as you want with this platform. These gentlemen consistently are improving and adding details, which is fantastic. One of my favorite things about Lendlord is I use it very, very frequently. We look at a lot of deals for ourselves and for our investor clients, and this just provides, honestly, the fastest and easiest way to do that elevated napkin math. So I did not go in and do the broken down closing costs. I did not use the advanced tab. Great to know that it's there. And if you're maybe, if you analyze 10 deals and you zone in on this one and say, okay, this is the one I'm most serious about, that's when I would recommend going and using every single advanced tab and really drilling down on those numbers. Loan to value.
By the way, before before you continue, so you can also, and perhaps this is the opportunity to show you the works plan generator, because if you do have improvement costs, you can click on the works plan and then actually create okay, we call it schedule of work. So let's say that you need to do some repairs or you know, changing the kitchen, so you can put description, we'll not put it now, notes, and the cost of this item, and then the starting date of this specific item and the end date. And then you can continue and add more items to your refurbishment plan, improvement plan. So this is a great way to actually create your refurbishment plan.
Your full construction schedule in there with times and
Yes.
allocated costs. No, it's fantastic.
And then in the end, you will see the entire costs and the start date and the end date of the project. You can export it to a PDF or download it as an Excel. And of course, it will add up to the improvement costs when you analyze the deal. So also, this is like also a feature on the premium plan. It's a new, quite new feature. All right, so let's continue. So the next, okay, next thing is the mortgage details.
Yeah, so I had the loan to value at 80% with a 20% deposit.
All right.
Fairly standard here when buying that type of property. The mortgage rate, unfortunately, 6%, which is kind of a deal these days.
All right, so you would put 6%. All right. Okay.
Property taxes down in the bottom, right there. Pretty easy. They're available in almost every MLS listing, and if they're not available, you're likely able to find some kind of comp fairly quickly. But this one was lucky enough that we had it. So property taxes $3,236.
All right.
The 10% management fee at $320 monthly I left in there, and then just as kind of a fail safe, I like to put in $250 monthly maintenance.
Maintenance, okay. Yeah.
And then kind of working our way back up on the other side. I always like to add the occupancy rate. Now, this is subjective to location, but occupancy rate in Peterborough is extremely high. So I left the occupancy rate at 95, considering, you know, worst case scenario, I think 90 would be reasonable. Property appreciation, I kept at a very conservative 3%. Dan, correct me if I'm wrong. I believe, was it that, or was it 6% that's kind of the national average?
Yeah, it depends on which metric you're using, but it's either like 4.11% or 6%.
Yeah, so I went light on that. Annual rent appreciation.
We'll do also like a best case scenario, worst case scenario. So this will be like the default. So
Yeah.
Exactly, right. We always like to first round, anytime I'm doing you know, something that I'm actually interested in, I like to go as conservative as possible. So 3%, knowing that could easily be 6%. Rent appreciation, unfortunately, that kind of caps out at 2.5% if you have existing tenants, or if you've got a tenant that you've placed at whatever rent that you've whatever market rent you're only legally allowed in Ontario to raise it 2.5%. And then annual inflation, you know, we all know that's a special number these days. So I think I left that in my calculations at 3 as well, a little low.
yeah, it's for the next 10 years. So we hope it will be in average.
Yeah. Yeah.
All right. So on the default scenario, you can. So it's interesting. So like the first year, like you're going actually to lose money in terms of the net cash flow, not a lot. But the cap rate, I think it's pretty good. But you tell me what you think, and then on the long term, the IRR is not bad. It's like 11.5%, and the total return, if we take into account also the property appreciation, is almost 900%. So
Yeah, so my perspective on that is like we're not looking at deals in today's market where the cap rate is lower than the cost of capital or the mortgage rate. And I think you'd probably be buying this with a 5.5%. I think, Nick, I don't know. You can tell
Yeah,
me.
I mean that would be good. It may be a bit higher since it's
Yeah.
it would depend if it's owner occupied or not. But no, great point, Dan.
Yeah, so I'd like to see that probably be over 6 for a market like Peterborough. Tough to find a deal that's going to be at the 6, but I think we're going to see deals probably over the next year or so. Some of these markets will creep into the 6% range.
Daniel, just to emphasize what you say, so in this case, if the mortgage rate is 6%, you want it above, so it means that you need to get this property in a lower price. Yes, so let's if
So
it
what if we did 450 or 445, something like that?
exactly. So yeah, so if it's even
And unlike the last few years, we're actually starting to see, especially in kind of these secondary and tertiary markets, a little bit of
Selling under
room.
asking.
Yeah, exactly. A little bit of room for negotiations that didn't really exist for quite some time.
yeah, but it's a good thing to see it on the deal analyzer that basically in order to make this deal stack up, you need to perhaps negotiate and take the price down a bit if you can, of course. But just for this scenario, let's keep the price as it is. Now, if we apply, so in Lendlord, you can use the what if scenarios button, and you can create different assumption sets. So let's say the best case scenario. In the best case, the occupancy rate, can I put it 98? And here we can put the 6% property appreciation. Rent appreciation, what do you say on the best case scenario? Can it be higher than 2.5 or not?
I mean, it could be with unit turnover. That's really the only way. So if one of the units were to vacate and you were to go in there and fix it up a little bit and bring that upper unit from, let's say, 1,400 to 1,550 or something like that, adding another $150 a month. Yes, but hard to put a percentage to that.
Let's put 3%, and then
Sure.
the inflation, we can take it a bit down, let's say, just for the use case, and then you can see that the IRR jumped to 17.8%. And then if we run a worst case scenario, then we can put, I don't know, occupancy 93, 92. 92, it means one month every year with no tenant. So just for use case, we can do it like this, and then annual property appreciation. What would you say, like in the worst case scenario for the next 10 years?
Probably your lower bound, your 4%. Like I think that's inflation right now. So if it's not outperforming inflation over a 10-year, I think we got bigger problems to worry about.
So you put it on 4%, so on the worst case scenario.
Yeah.
All right, then let's put 2% rent and inflation. Let's put it worst case, so let's put 4.5 just to see what it will do to the numbers. So in the worst case scenario, the IRR will be 12%. All right, so now what you can do now is go to the prospect report, and the prospect report, you can also upload pictures. You can read the Google Maps, and you can see the summary of the deal. You can also see the chart of the development of your equity over time. So you can see the mortgage balance going down, the equity is going up, and also the development of your cash flow over the years. and you can also export a PDF report. We actually redesigned the report, so they should look nicer now, and you can share the report with others.
Yeah, so just want to touch on a few things there. So one, the what if scenarios I think is a really wonderful feature. As investors, Dan and I preach on the podcast and with all of our clients that it's absolutely necessary to look at multiple exit strategies, right? To really know what's going to happen, best case scenario, worst case scenario, and likely case, especially if you are a realtor and you are looking for properties like this for your clients. All you have to do is go through those situations, print off each one of these PDFs, and now you've got extremely professional looking pro forma with first year and 10-year projections in 3 different scenarios. It really just does all the work for you. All we have to do as the user is find the proper inputs.
Yeah. All right. So now, Nick, you want to go to the second one?
Sure.
All right. So let me take the data. So the address is 104 Harvey Street.
Yeah. So this is an area that I know a lot of investors have done very well. This is Southern Ontario, kind of close to the U.S. border in an area called Chatham, Kent, south of London, Ontario. Beautiful old brick 4-plex building. So higher price tag here. Now I had to do a little bit of research on what the rents are in that, and I see we've got our friend Hart from Rent Panda here. Hey Hart. So using Rent Panda, we were able to figure out that a 1-bedroom in Chatham rents for just about $1,500. There's 2 1-bedrooms in here, 2 bedrooms $1,600, and a 3 bedrooms $1,800. So that total comes out to $6,400. Now, again, that may be a little rich. That may be a best case scenario. So let's start with 6,400, and then we can start to play with that number.
So 6,400, yes?
6,400.
All right. And you mentioned that you're going to do some improvement to the property?
Nope. This one looks good to go as well.
Right. Good. Closing costs for this one?
Closing costs, I use 12,500 again. Might be a little light on that side, but again, nice standard number to put in and again start to use the what if scenarios.
From the closing costs, who basically gets the most? If you look at all the third parties you need to basically to spend on, legal fees, the appraisal costs, the insurance, what basically the 12,000, like, can you say like what is the highest percentage of this amount, like on what you spend the closing cost of the 1,200? This is the question.
Yeah, I mean your lawyers is going to be a hefty fee there. I'd let Dan, who's probably a lot more familiar with closing costs from the realtor side of things, jump in there.
On the specifics on legals, or like if you
Well,
go
just break down a closing cost as to where that money's allocated.
Yeah, you have your land transfer taxes there, which is whatever your half. I guess it ends up being half a point on a deal of this size. And then lawyer is going to be 1,500 to $2,000 on a buy side deal. Moving if you're an owner occupier, but you don't really have that here. Title insurance is typically built into the lawyers, but I think it's about $600 right now. So usually it's just land transfer tax and about $2,000. And I just kind of tell people to budget like typically about 2 to 3% of the total, just to have a little bit of padding. There are something called adjustments here in Canada. So if somebody's prepaid their taxes, you would be on the hook to to take over all that. You have to buy those prepaid taxes off of them, as an example, or prepaid water or any kind of utilities. But that's basically just a future sunk cost anyway. So yeah, I would say the closing costs there are probably high actually.
All right. Okay, mortgage, would you get like 80% here as well?
Yeah, that's pretty much what I use for almost that's kind of the go-to investor standard for non-owner occupied property of this nature. This one being a fourplex.
That might be
6%.
high actually. Your 80% loan to value, I think.
Yeah, it could be.
Maybe 75.
So should we 75 say? Okay, let's put 75.
Yeah, I probably would.
Okay. Then so in cash you will need to put down 211-ish to cover the deposit, but also to cover the other purchase costs. Property taxes.
The tax, this one was 2,691.
Right. Then 10% manager, the agent fee.
Yeah, I left that in. Again, if you're a long distance investor and likely a lot of people would be with a property like this in that location, having a bit of a buffer for something like that, a managing fee is always helpful for me. And then again, I always kind of default throw that monthly $250 maintenance cost. Again, likely very high, but for me, whether it's spent monthly or whether it's spent on CapEx, capital expenditure, which essentially means you're saving up for a new roof, a new furnace, a new driveway, a new dishwasher, whatever that may be, something that costs you quite a bit more other than just ongoing like lawn care or whatever it is. I like to have that 250 in there just to accumulate. So that's a standard one for me.
Yeah, makes sense. Right.
And then the same appreciation and inflation metrics as
so just remind me, we said like property appreciation was 3 or 4? 4?
4%
yeah,
on the
we
low
keep
end,
yeah.
Rent appreciation 2.5, and inflation we kept on 3, and then occupancy rate 95. Yes.
Yeah.
All right. So this deal looks much better. Cap rate almost 8. You will generate cash in like immediately, like in the first year, and the IRR is 19%, the internal rate of return. Also equity multiple 4 in 10 years. Okay, so what do you have to say, Daniel, Nick, on those metrics?
Yeah, I mean, I like this one. I like the building. I think I think it looks good. As I stated initially, I think I did go with what would be considered, the higher end of market rents. So 6,400 is definitely achievable. I'd like to see how it performed at 5,000 or 5,500 to see if right. So I mean, we drop it to 5,000 and there it goes almost 2 full months on the cap rate.
Yeah, so the cap rate is still, so even with 5,000, cap rate is still above 6, and the IRR is 14%, which is good. So it's still, and this is with the occupancy rate that is, by the way, 95 is quite low. So no, it's not low, but it means that like 2 weeks every year ish, the property will be empty. But
that's a tricky one because it's a fourplex, right? So you could be looking at a number of years where it's 100% occupied, and then 1 year where maybe you've got 1, 2, or multiple units turning over. This one being the way that it was and not really needing any improvement costs, you're likely, unless you've had tenants in there for a long time, you're likely not going to see a massive amount of upside. If those units do turn over, you might be able to charge a little bit more per month. But I mean, the occupancy rate across Canada, specifically Ontario right now is ridiculous. I mean, no one can rent anything anywhere. People are lining up and bidding stuff. So I think a higher occupancy rate is quite realistic in this market.
All right. By the way, I know that in this property specifically, there is no need for improvement, but if you do improvement, then you can see how the impact on the metrics. So let's say if you spend like 50K, but this will actually increase the value by the end of the year, I don't know, by 100 or even 150, just, for the example, then you can see that it will impact the metrics for the long term, but also for the first year in terms, so you will have the profit from the value appreciation in the first year because of the improvement, due to the improvement you did. So it's something that just for users that actually are going to do some improvements, you can factor it in on the purchase details. So just remember to change the property value after you put improvement costs here. But if there are no improvements and the property is ready to be tenanted, then just keep the value as the purchase price, unless you were able to negotiate a better price and purchase the property with a lower price. All right, and if you do pre-flip project, just use the flip analyzer, and here is basically targeted for short-term projects and just to analyze the profit that you can make on a flip project. So we'll not do like now a flip project because I think that we are almost...
Aviram, before we leave the deal analyzer, there is some question.
Yes.
And the question, if it's possible to ask now a question for the deal analyzer, or we want to keep it for the end?
No, we are almost in the end. So yeah, definitely ask, yes.
Okay, so Sherman, you're welcome to ask your question.
Thank you. Hey, Nick, when you were looking at the first property where there wasn't a positive cash flow, one thing you and Daniel have mentioned on the podcast is that good deals are made and not always to get stuck on price. So how do you use this platform while drafting an offer, and like what other metrics can you use to see how a good deal can be made if it's negative cash flow?
Yeah, I can field that one quickly. So from my perspective, there's really only two ways you can save a deal. Well, three ways, I guess, you can save a deal that's not cash flowing. So you really only have the income of the property, the price of the property, or the interest rate on the property. I mean, you could maybe play with the management expenses, but again, that comes down to your net income. So you have your let's call it revenue. So you can increase that. So you could do a cash for keys program or purchase a property that's vacant and realize rents higher. And maybe that means waiting longer to, get a tenant who's willing to pay a higher amount. Or you can reduce expenses to protect your net, so your profit, let's call it. The other piece is you could try and get a sharper interest rate. So you negotiate with a lender, keep shopping, or don't buy until you get a better rate. And then the final piece is you negotiate on price. And that to me is really the market that we're entering. I'm seeing a lot of investment properties just sitting on the market. Like, as much as the market's incredibly hot right now for single family detached, anything with more, and I sell a lot of this stuff, so I know because I'm sitting on a bunch of listings that are going stale. If it's got more than one unit, it's not really selling right now. And that's because the numbers just don't pencil out. There's no incentive for somebody to buy a property that doesn't cash flow because of rates. And so we're in a market, I think, where investors who are selling are understanding of that. Otherwise, they wouldn't be disposing of the asset if it was a good performing asset for them. And I would be negotiating on price first and foremost, and just be willing to walk away, right? I would have 5 offers out at any given time if you're really in active buy mode, and then take the best one.
All right, thank you.
Yeah, Sherman, first of all, thanks so much for listening. Appreciate the support. Again, the importance of cash flow, especially on your first few investments, can't stress it enough. And Dan's right. There's really only one of a few wheels that you can turn there, and ideally you're turning more than one of those wheels, because the more you can, the better a deal you'll find. but it just like anything real estate, anything business, it's going to be a numbers game, right? So if this one doesn't work out and you can't pull any of those levers to change any of those numbers in your favor, it's likely not a good enough deal and not the right time to purchase that. So move on and find the next one. As you know, the best thing about Lendlord here is that you're able to look at what metrics do make that property work, right? So with that first one, we saw the purchase price. Okay, well, it's not a great cap rate. There's not a lot of cash flow there. Well, what if I were to be able to get it 50% less? What if that interest rate was 4.5 instead of 6? Or what if that interest rate went up to 7.5 and I still got it for less, right? So, Lendlord is able to do a lot of the work for you that we used to have to do with, pens and paper or Excel or whatever. So, just have fun with it and figure out the scenarios on here before you have to figure them out in real life.
Awesome, thank you.
You're very welcome.
Okay, thanks. All right. Okay, so if you have any other questions, perhaps we can stay 2 more minutes. So feel free to raise your hand or write it on the chat. Kyle asked if there will be recording. So yes, we will upload the recording to our YouTube channel. You can subscribe to our YouTube channel to get more content, and we will send an email to the entire user base with the recording of this webinar.
Wonderful. And look at that. If you look in the chat, Hart from Rent Panda is willing to cut the management fee to 79%.
All right.
There we go.
$79 per month per unit.
Yeah, there's a good strategic partner for you guys at Lendlord as well.
Okay,
Yeah.
let's speak. Hart, let's speak.
I'll
There he
connect you
is.
guys
Hey,
over.
hey, Hart. No,
We'll
there he
connect
is.
over email.
Yeah.
We'd be happy to collaborate, and perhaps, if people want to, like, which area you work in?
So we launched property management across Ontario now. So any city, big or small, in the entire province, we can cover. And that $79 a month rate was specific for that property. We actually drop as low as $39 a month per unit if you've got 15 units or more in a building, $49 for 5 units or more, and the rates go up if it's a smaller building. But yeah, let's definitely chat.
Absolutely.
Love it.
Sounds
Getting
like
deals done live. I love it, guys.
all right, guys. So thank you very much for joining, and feel free to reach out using this chat if you have, of course, if you want to report bugs or suggest new features, or just give us feedback. Feel free to do that. So thank you very much, Daniel and Nick. It was great as always, very helpful, very informative. So thank you very much and have a great evening.
Our pleasure. Yeah, thank you for your time as well.
Thanks, everybody. And if anyone wants a one-on-one or anything like that, feel free to reach out to Dan and I. We love the platform and put out a lot of short form content as well, just to really show you how easy it is to use.
You can put your contact details on the chat, Daniel, Nick, if you can, just for people that want to reach out. Okay, so I'm closing this webinar. Thank you very much.
Thanks.